Hi, I'm Roy Collin, and welcome to the show. I've got six podcasts, as you'll see behind me. A speaking podcast where I'm talking to speakers, coaches, authors, and even marketers. I've got the meditation podcast where I'm talking about meditation, breath work, yoga, chakras. I've got a load of meditations from 1 minute to 2 hours. I've got the Learn Polish podcast, and the episodes are about 5 to 10 minutes, and we deal with everyday topics like going to the dentist and things like that. The Awakening podcast is where I'm exposing fraud and corruption, but with solutions. And I've had guests like Mickey Willis, Dr. Peter McCullough, David Icke, and Thomas Rentz. The Crypto podcast is where I'm exposing fraud and corruption in the crypto blockchain technology. So about cryptos and NFTs, but also on the good things and how to invest safely. And finally, the Podfather, which you see there on my t-shirt, the podfather.me, is where I'm helping podcasters either to start a podcast or existing podcasters how to grow their audience. And most of the episodes are short, but they're good tips that will help you improve your show. I also have a store on all of my podcasts, so you can go in. There's some of my products and also some of the affiliates that I do, and that helps me with the show. You'll find everything on bio.link/podcaster. And I'm also helping people start the podcast as well as doing a podcast tour. So you'll find everything on the link there. I'd like to thank my sponsor, DanielPacker.com. He's helping people with fear, doubt, and anxiety. He's got a 90% success rate, and you only pay if he helps you. So be sure to check him out, DanielPacker.com. I hope you enjoyed this week's episode. Be sure to comment on the social media and let us know what you think. You don't always have to agree, but as long as it's not abusive, the comment will stay up. Welcome to the Crypto Podcast. You can find all our episodes on thecryptopodcast.org. My guest today from Hong Kong in Asia. He's a partner and CSO, which is the Chief Strategy Officer at SynFutures. And if you're watching on YouTube, BitChute, or Rumble, you'll see the beautiful background that he has of the company. It's a decentralized derivatives trading platform, a veteran of the finance industry. He spent several years working in trading and investments for a bank and large, multinational fintech company. Matthew spent several years working in trading and investments for Deutsche Bank, General Motors. He's also established one of the world's largest consortium blockchain-based cross-border trade finance platforms at Ant Financial. Matt, the finance guy, please welcome Matt Lu.
Thank you, Roy. Hello, everyone. Hey, this is Matt. Yeah. As Roy briefly mentioned, sometimes I'm known as the Matt, the finance guy, because I used to do finance stuff. I used to, manage treasury funds for some multinational companies, tens of billions of dollars. So when it comes to crypto, I a side job of being, from being the chief strategy officer is also manage the treasury as SynFutures, which is, we raised somewhere almost like $40 million. It sounds big, in crypto terms, but, compared to the money I used to manage, it's like 1,000, times.
So, I mean, like I've mentioned the different companies that you work with, but I'd like to kind of get to know Matt a little bit first. Like, you might just give us your upbringing, your kind of what you studied, and then the different companies that you've kind of moved around to.
Awesome. So I am older than I look. That's what usually people say. I've been working in, basically the TradFi fintech industry for more than 10 years before moving to crypto in 2020, right after the DeFi summer. But my personal investment in Bitcoin started much earlier in 2013. Yeah. But I sold in 2014, so I couldn't hold everything till now. But I wish I could have done better in that. But in the summer of 2020, DeFi summer, I was building the enterprise blockchain at Ant Financial, but then I realized big potential in DeFi. And actually, there was an accident. I actually broke my leg when I was on the ski mountain. Then I had to stay in bed for 2 months. that's when I got contact again with my old friend Rachel, who's the other co-founder at SynFutures. And it was like, hey, do you know this DeFi thing? DeFi summer sounds great. And she was like, oh, I'm about to build something. And I was like, okay, let's try this thing together. And that started SynFutures. While I was still in bed. So I would say that was a blessing in disguise for me.
Very good.
And we've been building this for 3 years. So far so good. Yeah.
So I suppose like the derivatives, it's kind of, when you've two or more parties, and it's kind of like speculation if they think the market's going to go. But you might explain it for those that wouldn't know what derivatives is, because I know in the Financial Times you talk about that and you think nothing of it, but some of the listeners mightn't be familiar with it.
Awesome. Yeah. Derivatives sounds like a complex word, right? It sounds like a complex word. It is a complex financial product by definition, right? But actually in crypto, it's actually much easier, right? That doesn't sound, easy to understand, but hear me out. In the TradFi world, for example, in my first job at Deutsche Bank, I was a derivatives trader. I trade interest rate, I trade FX derivatives, long dated, and so those were complex derivatives, right? There's the underlying FX transactions, there's the underlying bond, and then we build, all these fancy formulas that are derived from the underlying price. So you call it a derivative, being futures, options, and all these fancy structured products, they're all derivatives. Right now, why I say in crypto is actually easier. Think about this. Here's what many people didn't realize. What is Bitcoin? What is Ethereum? It's a string of code, right? So the underlying is a string of code rather than the underlying is crude oil or anything physical. So to some extent, I can say anything in the crypto world is a derivative because it's like something in the air. We have a code, a string of code that defines how this thing would work, and then therefore there's a price of it, right? And then derivative on derivatives will be, for example, futures on Bitcoin or option on Ethereum. But the underlying started with a string of code, and then now you write another string of code to derive another price from that underlying. That's why the most popular derivative product in the crypto world is perpetual futures, which to some extent, in my eyes, it's similar to spot. It's similar to just trading Ethereum or Bitcoin, because people can just go long or short, then add a leverage, and that's it. Right? That's of course they're the funding rate. There are all these other, I would say, smaller items, around the design. But for most users, it's as simple as now I want to go buy Bitcoin, but I want 5 times the leverage. As simple as that.
So when people are doing that and trading, like they have to put it onto your platform then for the security of the person that's making the option on it. Would that be correct?
So today, the users trading crypto, trading derivatives have many options, right? So, but I would say there are 2 major categories. For one, many people go to the centralized exchange, right? So they deposit money and in the centralized exchange and trade there. Of course, there is better customer support, better customer service. But at the same time, you're taking counterparty risk, right? And then there are countless of time in the past that some centralized exchange have done funky things. FTX as one. And then the other route are, decentralized platforms like SynFutures. And there are others, for example, there are DYDX and some others where, for us, at SynFutures, it's on Blast and a level, a layer 2 network. And then, everything's transparent when you're trading on SynFutures. is not really depositing money as SynFutures. It's the money is on chain, so we couldn't touch the money while you do the trading. In high level, these are the two directions most of the users can go to.
With the kind of know your customer, because basically when you're dealing with any exchange, you have to give passport, even some of them a utility bill and all the details. Does that not kind of take away that the real DeFi, it's kind of keeping it anonymous? Because the reality is most governments have control over everything that's submitted. So everything is basically traceable.
I would say that's a choice by design. For example, if the more centralized exchanges, you're right, there's more KYC stuff, because on one side, of course, the user is going to take the credit risk of the platform. On the other side, the platform itself sometimes offer credit or offer extra line of support for these users. So these KYCs, besides checking the government documents, are commercially required, right? But in the on-chain world, from day one, this is built as a trustless state, we call it, which means there's no such concept as credit. The user don't take our credit risk. We don't take the user's credit risk. If, for example, they want to trade something, then it'll have to be collateralized, over collateralized, before they can open a position. So, as a protocol, as a DeFi protocol, we don't extend any credit, and therefore, a KYC isn't commercially profitable, right, or commercially needed. And also, the on-chain world, I can argue there's actually better transparency, because every transaction is recorded on the blockchain, and anyone can read this. Of course, you need a little bit like tech background, or you need to use like some of the good softwares that are currently available. But the flows of the fund, the conditions, if something's hit, something's not, everything's traceable on chain, completely transparent, and that is, I would say, a paradigm shift from the more centralized black box, because as a black box, both sides take more risks, right? It's like, hey, if I run a centralized exchange, the data all belong to me, so whatever people does like there, I take part in that responsibility. But if the transaction on chain doesn't even belong to any protocol, but it is there completely transparent and belong to part of that blockchain, then anyone can go and take a look. Not to mention, of course, these days, most of the protocols are even open source and protected by this freedom speech, rather than even like IP or something. So it's a different model, I would say. But of course, to be honest, most of the users today, when they come to trade crypto, they still go to the more traditional route. Like I said, there's customer support. There are people answering questions. But the more degens and more like advanced users, we've seen a good amount of migration to the on-chain and DeFi world.
With all the scams that are going on, and like one recently, I think 70 million he got caught for that. When we can, because I know the software, I've seen that you can trace all the thing. How come then that, whether you get AI to do it or you get the FBI to do it or whoever it is, how come they can't trace it? Because eventually they'll be converting it to something to fiat. Like, it should be traceable to going back to some exchange, which in turn they can go, okay, this is Jimmy from, someplace, and you catch him, right? Am I wrong, or is there, how are they doing this, that it's fully traceable in one sense, but in the other sense, nobody has a clue who's robbing all the money?
I see. So I think, like you said, there are a lot of these scams. To be honest, it's really hard to prevent these things these days. I give you one example. 2 weeks ago, a close friend of mine came to have lunch with me at my home, and he turned on his laptop and wanted to show me that I have a bug in my front end in SynFutures front end. I'm like, no, we don't have like front end bug. He's like, no, I'm gonna show you. So he showed me, and that is the moment I realized he was phished by a fake website right in front of my eyes. That was the moment I realized this is really hard to like prevent, right? Because and then we have taken down, I would say, in the past 2 months, hundreds of fake websites, fake Twitter accounts, people impersonate, for example, me or other members in the team. So it's like it's I would say industrial level of the scams and espionage that we are fighting against. Now, when it comes to your point earlier, right? So the centralized exchanges, usually they have the KYC, they know who these people are, right? While on-chain, yes, on-chain, the accounts are not associated with real people, right? I think when we come to I would say the layer where these things already happened, then of course sometimes it's easier to have that ID already to associate to a real person. But the actual benefit of being on-chain and transparent is actually a deterrent in before these things happen, right? So it actually reduces the amount of scams that easily happen, because, for example, if there's a scammer and he wants to move money, right, his whole account chain on-chain will be monitored and will be kind of blacklisted. Then his money is gonna go nowhere. So basically,
like the miners would know that, and then nobody would actually do an exchange for that when they're looking for, yeah, would that be correct?
Exactly. And these days, there are a lot of good services to also help on this. Therefore, that's a deterrent for potential scammers and hackers. So that they won't do that. So that's part of the benefit, actually.
And with like your own company, then how are you protecting people's information? Because like with the cyber crimes and everything, just everyone's paranoid at this stage. So just kind of what systems have you in place?
So I would say at SynFutures, we have 2 layers of protection. The most basic protection will be we ensure the quality and safety of our smart contract and our system. So there's no way to hack into the system, because it's crypto, right? So it's not like for example, the internet company I used to work for. If there's a hacker, then they hack some data, and then these hackers gonna try to monetize this data somewhere in the I don't know, the dark web. Yeah. But this is crypto. If people come to hack, they hack money directly, right? So that's why we have a very solid tech team led by a PhD in cryptography. We write our own code, and then we're audited. We actually have been audited by QuantStamp, so they send their best audit team. Supposedly it's going to be a 4-week work. It took them 8 weeks. Because and of course at the end of the day they give a report and have a very high rating for the quality of the code. So we want to make sure that base layer is there, so when user come, for example, when they're trading, they wouldn't worry whether their margin gonna be drained by some hackers, right? So that's the first layer. The second layer comes to the design of the product itself. because derivatives. Again, it comes back to the earliest, the first topic we talked about. Derivative is actually a complex thing, right? If you actually dive deeper in the design. So we have seen that many derivatives platforms, there's no bug in the code. However, the product is poorly designed. So there is a, like, for example, there's a bug in the rule of the game that can be used to kind of break that system. And sometimes, this is also, I would say, amplified in the on-chain world, because in the on-chain world, number one, you don't know who you're dealing with, right? Sometimes, and then you don't know how much capital they have. So that's why it took us 3 years to build 3 different versions, yet we're still improving on the design of the financial product itself, to make sure, number one, is it's usable and the user like it, and number two, there's no like financial design flaws that could be exploited economically. I mean, we've gone through some attacks, or I would say intended attacks, which we successfully defended, and that happens pretty often. Yeah, and every time it's a good learning for us.
Because you're constantly protecting and improving. Yeah. So like,
yes,
with the auditors that you kind of get then, because obviously to have that kind of stamp is it's good for you, for the people that would be using the service, because they know that there's the external company that's actually coming in to kind of validate it as such, correct?
Yes. So for the codes audit is by QuantStamp, which is a top code audit firm, and we also have economic audit or product audit by Chaos Lab, which is also a industry leading economic audit firm. So they don't look at the code, but they look at all the functions of the product and run scenario analysis, trying to break it, from different angles. And we've also done that as well.
I'll tell you where I'm going with this one, because in most businesses, a lot of people would be familiar with ISO, for the ISO. So you're paying the company to come in to do the ISO. So I remember I was working in Ireland for a construction company, and I had set up all the filing systems, so I knew exactly what it was. So it means if I get hit by a bus in the morning, somebody else can come in and take over. But then when I went to other sites, it was like hiding the thing. But at the end of the day, it was like, they're not going to not give it to you, because you are paying them. You're the client. So one, that's and I mean, I don't know the whole intricacies of these things, but there's, you have that, and the other is you could have somebody that's working for them, that's there to infiltrate. I know they're kind of checking out. Is it that you're protected as well? Because I mean, you've got your secret sauce that they can come in and actually kind of, because they're in there, that they can actually plant stuff, or is that just full protection and they're just validating different things?
I think they do both, right? So for one, they check these designs and do things in the, I would say, in a normal way, right? And they also do this, I wouldn't call it hacking, but it's almost like that. Yeah. And then they periodically give us feedbacks on whatever they run already on the site and the result. What is it? Without telling us in advance. So that's actually really helpful. It also helps us to fix a lot of the issues, especially setting up some of the parameters. That is critical. Yeah.
Okay. And I suppose, because I mean, there was a few things like the white paper. I suppose if you could just kind of talk about what's kind of covered in it, what so that the listeners would understand it.
Sure. So the white paper that we wrote for the SynFutures version 3 is mostly about our new design. We call it the Oyster AMM. right? AMM stands for Automated Market Maker, which is a unique design for on-chain liquidity provision. It's a simple and beautiful design that all the people on chain loves it. Now, what we have is a combination of a ranged AMM, i.e., in simple terms, you provide liquidity in a range, in the price range. And the range can be narrow or wide, right? If it's narrow, that means there's better liquidity depth, better capital efficiency, while there's, of course, better risks. If it is wider, that means there's less risks, but the capital is less efficiently used. Now, that's the range liquidity. And on top of that, we also have a purely on-chain limit order book that we utilize. Sorry to go a little bit technical, but we utilize some of the liquidity points to, we convert them to irreversible liquidity points. So effectively, they become limit order, and the two are organically united in one model. That is a new invention in the industry, because in the past there were the range AMMs, and there was some order books. People always view these two as completely separate schools. I mean, even for us, we started with the AMM school, but then we later realized we should put aside about which school we belong to, but we should really care about the ultimate user experience, which is from the liquidity depth. And we want to leverage on the expertise of not only the relatively passive liquidity provider of the ranges, but also the expertise from the active market makers who like to use the limit order books. Therefore, it's the combination. And then, of course, I'm gonna skip all the math part in the white paper.
Well, I mean, it's on your website anyway, so they can download it on the if they're into all the graphs. Yeah.
Yes. Yeah. So the goal is to find the optimal model for an on-chain, permissionless, and I would say open protocol for building derivatives. And then after we launched we published the white paper, we were also looking in terms of where to deploy first. I think we had good chemistry with the Blast team. Blast is a layer 2. So we went together to launch at the end of February, actually the last day of February. So for this version 3 so far, it's been live for a little bit more than 2 months. So far, so good. We already made to top 3 of all derivatives protocols by now. Yeah.
Okay. Then you've got NFT Futures, like futures is just the way it's going to. So you might explain that one.
Yes. In the second version, we had we look. Let me put it this way. I'm a boring person. I actually know very little about NFT, but then our developers are very smart. They built this set of smart contract that not only can list the crypto futures, the crypto derivatives, but the same set of smart contract can be used to trade price of the NFTs or the fractionalized NFTs with leverage and long and short. So we had this, I would say, innovative product, NFT Futures. We got it N Futures. Yeah, I think you pronounced it right. Which in the back end, it's the same set of smart contract that we use for trade crypto futures. In the front end, we want to make it fun to look like Tinder, so people express their opinion on certain NFTs if they like it, right? It's like, oh, I like it. I put money behind my opinion. I click like. It's a long trade. If I don't like it, I swipe left. That's a short. That's also an experiment. We try to make trading stuff more interactive and more fun. Although again, I just want to put the disclaimer there. I'm a boring person, but I try to be fun. Yeah.
And just like with some of the NFTs, because it's like, I think about a year ago or maybe 2 years, there was one I was bidding on, and it was art, but there was a lot of utilities, and it was on OpenSea. And there was kind of a bit of fraud going on, bots and everything. But irrespective of that, then there was people that kind of got it whatever way they did and were selling it on. And I had no way of knowing the utilities, whether they had used them or not. And I know that there's some upgrade to that. Some people, some have platforms that can do that. But is that something that's kind of incorporated into your thing? Because like, for example, this was art, but you were getting a ticket to an event worth $3,000. You were getting lifetime access and so you were basically buying something for 1,000, but you were getting about 5,000 in utilities, whereas the art didn't really mean nothing to me. But when somebody else was selling it, you didn't know if you were getting the utilities. And I'm just wondering, has your system kind of the ability to do that, or does it stay away from things with utilities on them? Is it just kind of like the images and things like that?
I would say for the product we build at SynFutures, including NFT futures, we're pretty focused on the trading part. Pretty focused on the price itself, rather than the utilities of the underlying NFT. However, I do realize, to be honest, you mentioned some NFTs, like for example in the past, it does sound like I think, for example, in the previous cycle, a lot of the NFT didn't continue their journey in this cycle, right? So, but that's pretty typical crypto, right? A lot of token didn't make it to this cycle, but whatever that made it here, I think now we've seen new forms of adoptions that coming from this ashes. Yeah, for example, recently. This week I've been playing a lot. There's something called Fantasy Top. It also it's it's an NFT stuff, but it's a very interesting game to play. You can check it out. It's also on Blast. We actually at SynFutures we work with them. So it's more like for example, my son plays this Pokemon game. You collect these cards and then fight, and you probably win a better cards, something like this. And then they do it. They use the NFT to do it on chain, and then associate that with KOLs. That's a new form of using the NFT technology that wasn't previously I would say well used. Yeah, but it's always good to have something new like that.
And I mean, if I look at, you're doing something like, last I looked, it could have been a lot more now, something like 18.2 billion. I don't know what percentage of that is kind of NFTs, but I'm assuming with the kind of market that you've got, you would know this definitely is something that's of interest, that there's so many people. Is that something that's kind of shared, or is it your own secret sauce that you can kind of realize, ooh, the next Bored Ape, let's say, or whatever, that you can kind of see something's brewing?
We've had some experience like you said before, but that was a while ago actually, because in the relatively early days of our platform, we had version 1. There was like this new project. We suddenly saw people listing it on SynFutures, and then people start trading it like crazy. And then we realized, wow, that's something getting very hot. And these long tail assets is a unique selling point at SynFutures because we can list anything, any long tail asset, and it's a pretty fast and permissionless process rather than on some platforms on one side, of course, you wouldn't have liquidity for this long tail asset. On the other one, if you want to list it, that's going to go through a governance thing that's going to take forever, and no one's going to actually list it. But at SynFutures, this is a fast thing. Now, for us, I would say most of the long tail assets, for example, including NFT futures, are where we get a lot of new users and a lot of, I would say, user activeness, right? Because people love these popular assets, and they find, oh, SynFutures is the only place to trade long short with leverage. They're happy to try. And then we have seen actually most of these users, when they stay, they also migrate to trade the major pairs after they see good liquidity depth. For example, they might trade Paper derivatives first, but then later see, oh, well, I can take some ETH position with a deep liquidity here on the same platform. So that's I would say, a pretty typical user journey from the acquisition to their growth as SynFutures. But yeah, I have to say, again, I don't have a secret sauce on what's gonna be hot. I wish I do. Yeah, but I think spending more time on Twitter may be more helpful than this. But sometimes it's too much time. Twitter is consuming too much energy. Yeah.
No, definitely. And same with Discord. That's what I find is sometimes you go into it and then it's, unfortunately, I mean, I know there's a lot of crypto people, but it seems to be, especially in Twitter, it's like negativity and it's just pushing it out there, and then you kind of go down the rabbit hole and you're spending too much time. So with
Yes.
your fees then, is it variable fee that you have, or via set kind of, what way do the charges work for you?
Oh, so it's an extremely simple business model as SynFutures. Um, we we charge fees, of course, on the trade, right? Usually, so for now, for most of the pools, the taker pay 3 basis points on the trade. So part of that goes to the liquidity provider, either like a LP in terms of the passive range, or as a as by the maker, who use the limit order to provide liquidity, and the remaining part goes to a vertical reserve, which partially is used for insurance and partially is used for other development work. So again, we've checked like across various different platforms. We charge a pretty low fee, and even on top of that, we also have a fee tiering program, mostly for institutional adoption. If the volume reaches certain level, then we also have an even lower fee tiers. Yeah, so that's how simple it is.
Oh, excellent. So, I mean, I ask a lot of the guests, what exchange, like, obviously for doing this, but if you're just exchanging to fiat and stuff like that, and the other, what wallet you actually recommend? Cold wallet.
Oh, you mean what cold wallet?
Yeah, that you, yeah, because
um
everybody's got their favorite and they have reasons for it. So I'd love to know yours.
um so my take is a little bit different from most people, I think, when it comes to wallet and other like these infrastructure stuff. um I would put safety as the first thing. Of course, convenience is also important. Sometimes these wallets have better functions. But for the record, I use a lot of wallet products. But when it comes to where I put majority of my asset or my trading activity, to be honest, I use MetaMask, although it's not that easy to use. And when it comes to more like day-to-day smaller activities, then I use other wallets that are much easier to use. Yeah, I mean, I've tried a lot. Like, for example, the Binance Web3 wallet. We also use the Coin98. I use Privy. Yeah, and a couple of others. So yeah, but when it comes to like recommendation, I would still say safety first. Yeah, go with where most of the bigger guys go. Yeah.
And who do you think created Bitcoin?
Oh,
Because I'm
It's a
getting
good
so many
question.
different answers on that one. I have to ask it because I love the answers. Like, everyone's got their own kind of opinion or they know something. So I'd love to know yours.
Here's what I think. I think number one, um, I don't think it's, some people say it's created by some like U.S. government, or some people like that. That I wouldn't buy in, because today, as everyone can see, Bitcoin and the whole blockchain technology, it stands for self sovereignty, right? Rather than any, I would say, country, or any, I would say, the government, right? So I'm pretty sure it doesn't come from any government agencies. That's number one. Number two, I'll be looking into some of the early documents and realize the fact is, blockchain wasn't a new technology, right? It's a combination of cryptography, storage, as well as communication technology, right? It's actually a combination of the three that creates blockchain technology. So it isn't really a new technology. It's more like a application of existing different types of technologies. That's why my theory is it wasn't one person. It's actually, it must be from experts, from at least two or three experts in these two or three fields, that they created this, because you've got to be expert in these fields before it would be very hard for one person to master three types of technologies at the same time and think about how to connect them and create something new. So I would say it's a collective work. Yeah, and of course they have a made up person. Yeah. Yeah. Again, that's just my theory.
No, yeah, very good. And
yeah,
I suppose just finally with like Estonia, they're kind of big on crypto and just, but I hear a lot that it, like in your Hong Kong, Singapore, is kind of helping people. It's kind of supportive of the kind of crypto world. So you might let us know kind of what is the government there doing to help let's call it an industry.
Yeah, I would say, look, I'm not a public policy guy, but my sense is, there are a lot of builders now in Asia compared to 2 or 3 years ago. I think 2 or 3 years ago, Hong Kong, Singapore didn't have this many builders in crypto, especially in DeFi. But now I think once a lot of the Asian builders realize, hey, Hong Kong, Singapore have better infrastructure and talent support. On the other side, we've also seen some of the, for example, teams in the US and Europe moving here, because on one side there's more availability of talents. On the other side, tax wise is better. Yeah. But that's not only for crypto builders. It's same thing for example, the TradFi institutions. They move people here. Yeah, I'm actually a little bit surprised on how fast this trend has developed. Yeah, because as when we started in late 2020, early 2021, we were pretty sure crypto and DeFi is a Silicon Valley thing. Yeah, at the time. Now, it is, well, I have to say, the Western Hemisphere still has a big voice, but then we've seen, especially a lot of new teams in Asia started to build good products with a focus in user interactions, in the user experience, and that I think is the winning formula in this cycle and also going forward, because now it's not only about serving a small bunch of degens who doesn't care about user experience. It's about mass adoption of the cryptocurrency technology as well as DeFi protocols. It's about mass adoption now. So user experience really matters. And again, like I said, I think teams in Asia are good at this.
I know I said finally, but I just have another one for you, because I see the likes of BlackRock, Vanguard, like they're getting into buying Bitcoin and different things like that. And reality is they have the printing press, and if you trace it back, who owns who, it's all the corporations on each other. Like at the end of the day, if you've got a printing press, you can come in, you can manipulate any markets. Can you ever see it where it's not connected to fiat?
Yeah, I think you mentioned about maybe the ETFs, right? So for example, and then of course all the media coverage about this. It's a good development, overall, and I do think that for example, the inflow and outflow of the net inflow and net outflow of the ETFs now really affects the Bitcoin price a little bit, right? And which Bitcoin price then affects the overall market a little bit. But we are pretty early in terms of how much people gonna buy through the ETF, right? Think about this. 2 or 3 years ago, cryptocurrency wasn't a major asset class, right? We were a bunch of people who were like, hey, we started with computer code and now this thing is worth a little bit of money, but it was never even considered part of the financial industry. Then I think in the last 2 or 3 years, gradually, especially with the approval of the Bitcoin ETFs, now Bitcoin and cryptocurrency become a part of the I would call it the asset spectrum, right? So from the safest to the riskiest, maybe cryptocurrency is on the riskiest side, but it's in that spectrum. And once you're in that spectrum, and once you have these approved ETF as channels for everyone to easily invest in, then we can make a number, like we can make up 0.5% or maybe 1% of the asset that will go in there, right? Because I mean that I worked at asset managers before. I know at the end of the day, it's an allocation game. If you have again 0.5% or just 1% of that allocation, that's gonna be huge. And then I think we're getting there gradually. Of course, there will be up and downs, but overall, I don't see the ETF and the coverage as a manipulation of the market. But I do see it's affecting the market, and that's also a good sign because more flow is going to come. Yeah, so it's going to affect the market positively. Yeah. So yeah, that's my take on that.
Okay, excellent. Listen, Matt, thoroughly enjoyed the call. You might let people know where they can actually find you.
So I'm reachable on Telegram, on Twitter. My Telegram handle is MattTFG, so Matt the finance guy. Yeah. Yeah, and my Twitter account, you can find my Twitter account through the SynFutures Twitter account. Yeah, sorry, I think the handle is a little bit long. But yeah, okay. Very happy. Thanks a lot, Roy. Yeah. I also truly enjoyed today.
Yeah, no problem. I'll make sure I'll put the links both the audio and the video so that everybody will be able to contact you. Thank you very much. So that's all.
You're welcome. Great.
Yeah, perfect. So that's all for the Crypto Podcast. You'll find all our episodes on cryptopodcast.org. Be sure to give us a thumbs up, 5-star rating, share with your friends, and also comment on what we discussed today, because we like to see what you thought. Until next week, take care. So I hope you enjoyed this week's episode. As mentioned at the start, you'll find my 6 podcasts on bio.link/podcaster. And also, if you'd like to start a podcast or do a podcasting tour, you'll find the information on that or on the QR code that's there. Be sure to give us a thumbs up, 5-star rating, and share with your friends because it really helps. And also, I'd like to thank DanielPackard.com, helping people with fear, doubt, and anxiety. He's got a 90% success rate, and he's only charging if he helps you. So be sure to check him out, and you get a free call to discuss everything. Until next week, take care.